All right, so yeah, picking up from where we've stopped, the day one, the day two, this is the day three, and my emphasis today will be risk management. Yeah. Today's emphasis would definitely be risk management. And then there are different dimensions to it. I know we've already talked about market structure, understanding structure here and there. We talked about candlesticks, how important they are. We've mentioned support and resistance, how to use them, how to spot them out. But what will keep you actually in the game for a very long time is risk management. Okay, so for those who have watched the tips mastery videos that I shared, I already did all the simple mathematics on how to calculate lot sizes, how to know what your lot size that you're using is, and blah, blah. All right, so let me just come over here to MetaTrader 4. So if I launch this trade right now, I'm just looking at the chart, it's random. And then I decide to click on, it's a live account actually. If I decide to hit the buy or sell button right now, can you see what the lot size is right here? This is 1.0, it's a standard lot size. When you're trading with a standard lot size, the implication is that every pip for you or against you, so if we say, for example, you're trading with a lot size, standard lot size of 1.0, that means you're trading at $10 per pip. So you want to ask yourself, what account size am I using for me to be able to trade this lot size? Obviously, your account size must be able to measure up with the kind of lot size you're using. There's a micro lot size. Macro lot size, this is from actually from anything from 0.1 to 0.9. All right, anything from 0.1. This is anything greater than from 1.0 and above, okay? So if you're trading, for example, you're trading with macro lot size of 0.1, if you're trading with 0.1, it simply means you're trading at $1 per pip. All right. So it means that every pip, every movement for you or against you in the market is measured at what? $1. And then the micro lot size, all right, which is from 0.01 to 0.09. All right. So, and if you're using the lot size, the micro lot size of 0.1, it actually means that every movement for you and against you is measured at 1 cent, right? 10 cent rather. So for people who are trading now, another thing I would get to say is this. Okay, let me not lose the train of thought. I'll speak for that again. All right, so risk management actually begins with understanding, at least you want to know what lot size am I going to use for every trade. It's not enough to just jump on the chart and then if for example, you have, maybe you have somebody's asking if this is trading view chart. Yeah, I'm using trading view actually, but this is currently MetaTrader 4. This is MetaTrader 4, right? Ben, did you get that? This is MetaTrader 4. But it's all the same for the chart. But here I can just immediately like see the chart and then enter the trade immediately. All right. Most times I rather even use my MetaTrader 4 on my phone. I don't necessarily use MetaTrader 4 on my laptop, but sometimes I just want to use it. It's all the same. You get, it's all the same, essentially. It's all the same. Let's see, Roger, why. It's all the same. Can you see it? It's all basically just the same, bro. Yeah. What was I saying? So essentially, that's how lot sizing works. That's the first thing you want to do. You want to know. Let me make another example here with still with lot size. If, for example, you are trading with lot size of 5.0, it simply means that your every dollar for you or against you is 50 pips. I mean, $50. I mean, every pip for you or against you is $50. On the other hand, somebody trading with 0.5 is actually going to be what? $5 per pip. All right. And then you need to know, of course, if you're trading a Naira account, if you're trading a cent account, whatever, or if you're trading, maybe your account is in euro, is in pounds or whatever, it's still about the same principle. And if you're trading with 0.05, for example, it means every movement for you or against you is what, 50 cents. All right, so just understand. So when we're talking about Forex, basically, everybody makes the same amount of pips. All right. Everybody makes, equal amount of pips, but what differs is the risk that individuals are taking. So for example, the institutions, when they are trading, maybe they are taking a 10 pips kind of trade, but these are guys who are trading at maybe 50 pips. Did I say 50? Maybe 5,000 lot size or something. That's like almost 5,000 lot size would be how many? That's about $500,000 per lot, per pip, right? So you get the picture. For example, if you are taking a buy on, I'm just saying, and then you're anticipating this. So if, for example, somebody who is trading with lot size of 5.0 takes this trade, every one of them is actually making 57 pips. I hope you can see that. 57 pips. So let's see what it looks like for somebody who is, if you're trading with lot size of 5.0, and then you're trading with, that's $50 per pip, right? And then you make, let's say 57 pips. What's the value? For somebody who is trading with lot size of 0.5, that's $5 per pip, times what? 57. Guys, help me with the values, please. Help me with the figures. Help me. So what's the first person? Okay, good. 2,850, right? $2,850. The next person definitely will be 1-0 short of that. Right? Thanks, Debbie. I appreciate that. Then the last person will be what? I think 2.5. Huh? Is this correct? Is this correct? That's 28.5, sorry. All right. Good. Yeah. Okay, so you can basically like, this is what it looks like. Is it 2.85? No, it's 28.5. Yeah. All right, so you can see. And on the other hand, let's say they took the buy trade and then the buy trade went against them. And if each of them is losing 20 pips, you know, if it was a loss of 20 pips each, you can also see. So if you're trying to like, it's not just about having a big account size. When you, for example, if you lose $2,000 in a day, how would you feel? How would it make you feel? That's one question like you need to also ask yourself. It's not about saying, oh, I can use a large account. Let's say for this now, you took a loss of 20 pips. This guy is going to lose about you can just do the maths. It's that simple. Like if each one of them is going to, if they're losing 20 pips, you know, to make this amount, you can see what the loss would also look like. So you need to ask yourself, am I comfortable with losing this amount of money? If you lose $100 right now, like on one trade, is it going to affect you? Would you be thinking right to go in on the next trade? Is it going to mess up your mind a lot? These are things you need to start asking yourself even before, you know, you consider using any form of lot size. One other thing that I want you to note, you know, in your journey for risk management is the fact that over leveraging is like, when you're over leveraging, you must be able to accept the fact that if shit happens, you know, can you really live by that? I know people trade based off the principles of impulse entries, over leverage. They want to, you know, make big money over time. One of the questions I ask them is, do you just want to trade today and then you want to retire today, or can you see this as a career path? Like, this is something I'm ready to do for the next 5, 6, 7, 8, 9, 10 years, up to, you know, what's the point trying to like crush yourself and then you want to make all the money now when you understand that you are not even there yet in terms of maybe skill level, in terms of, and sometimes it's really fear that really fucks people's mind up. Like, I know some guys who've been trading, like they've been looking at chart for the past 2 years, but once they eat one loss, they are out again for, you know, several weeks. And then ask them, how much did you lose? Sometimes it's just 20,000 naira. This is the same amount they can take to the bar and, you know, flex with at the bar. This is the same amount of money they can probably dash somebody. But in their mind kind of amplifies it like, oh man, like it's terrible, it's bullshit, you know, and then it's really going to affect the way you grow as a trader. When it comes to the psychology of managing your risk in terms of your losses as a trader, nobody would actually be able to like give you that magical blueprint. It's only you can figure it out and say to yourself, okay, this is where I'm actually missing it. This is why some people get into a loss. All right. Probably you analyze the chart and then you want to take a trade. This happened to, I don't know who took gold when I called gold on Monday. I already knew that it was going to be a short-term movement because we are entering based on a 30 minutes time frame. So you are entering a trade based off 30 minutes time frame, but you want to set a take profit of 4 hours time frame. It doesn't make any sense. I don't know if you understand what I'm saying. So for example, this is what I mean. Look at this, for example, right? Yeah. look at this, for example, if you are, okay, anticipated, okay, this is a resistance level on the 30 minutes time frame, and then you're taking a short trade. I know some of the people who have been trading well here, can relate to something like this. It just actually takes time and, serious discipline for you to get your mind out of that illusion. So you've probably taken this trade down to this point. You've probably made maybe like 60 pips or thereabout, and then close the trade. You entered based on a 30 minutes time frame. Close the trade at this point, but your mind tells you, no, Oshimalole. You pull up more, like something like this. So now you are no longer trading based off technicals. You are now open and anticipating what you shouldn't, like. Whereas you would never be able to make that money because you never can tell what's going to happen because you only analyze for a short time. And then the trade probably goes back to eat your entry or even goes back to your stop loss. And then you're like, hi, bad day, terrible, blah, blah, blah. And then it fucks your mind up. Like you even doubt yourself on it going into the next trade. You're like, is this really my thing? Can I really do this? Whereas you caused the pain for yourself. So what I'm saying in essence is this: put this at the back of your mind, write it down if you have to. On the time frame you are entering the trade, on the time frame you're analyzing and making your entry, that's where you should also anticipate your profit or exits. All right. You don't come in on this trade now on 30 minutes time frame. Probably it has like a stop loss of just 20 pips or 15 pips. And then you're like, I won't set the stop loss because on H1, it's like you can still come back and retrace to that level. And then instead of you losing just 15, 20 pips, you're losing 40 pips on a trade, that shouldn't have gone south in the first place. What am I saying in essence, guys? This is, something you must tell yourself and be very, very truthful to yourself, right? I entered the trade based off 30 minutes time frame. I'm exiting off that time frame also. Maximum trade that you should take in a day, maximum, maybe 2 trades in a day. As a matter of fact, if you're a beginner, maybe 1 is just enough. Because like I said, this is a career path. Probably maybe your current job gives you 100K in a month or 200K. Let's say your current job gives you maybe 300K in a month. And then you come to trading and then you're probably able to make like 25K in a day. You should understand that even if you do that 3 times in a week, for now, being a beginner, over time, you would be able to earn way more than your job. All right. So I don't want people to always have, and that's why personally for a time now, I have stopped the act of like sharing what I'm personally making on the group. I don't know, maybe it's not really encouraging some of the guys who are new, but I feel people are getting themselves, I can't tell the people who have come to talk to me on a private, like, I blew my account, I wasted my money, I did this, did that. And that's not what I really want for you. Don't take my game for it, right? Give yourself that room and time to also grow. Like that's what the group is actually for, and that's what it's actually about. Give yourself time. I've been doing this actively for like 4 to 5 years in. You can't compare my results. You shouldn't compare my result with your own result. The best it should do for you is probably to just motivate you and see what you can also do. There are even guys who are making more money than me now in the group, and I'm just happy and excited about it. Okay. So with time, you would also get there. You can, you can be able to do those amazing numbers. But when you're just starting out, keep your expectation very, very, very small. It will help you. So imagine you run like in a month or in 4 or 5 months, you consistently close up in profit in 4 months. Like month 1, you did profit, month 2, profit. Not that you didn't have losing days, but at the end of the month, when you calculated everything, you see that, oh, my account is growing. This is the kind of momentum and energy you need. You need something that can actually motivate you gradually, to get you going day by day, day by day. And then monitor your progress, not in terms of amount you're making, but in percentage. It is actually way better. If you have $1,000 account and then you're able to do 10% of that, probably in a week or in a month, you've done $100, right? It's way better than when you start putting yourself under the pressure of, oh, I need to make 100K, I need to make 200K in a week. It will mess your mind up. It might happen along the line, but try to like focus on the percentage growth, and that's a better way to look at things. All right. Now I'll talk about the principle of setting stop loss, and then I'll take a few questions. Okay, so we said we buy off support and then we sell off resistance points. If we are buying at support, where would our stop loss be? Anybody? If you're buying at the support level, where would your stop loss be? I'm waiting. I'm waiting, guys. Good. If you're buying off support, your stop loss definitely will be below the support level. Now, there are two ways to So let me use this live chart now for an example and see the two ways in which you can set your stop loss. All right, so I'm assuming right now that this trade closes like this, and then you want to take a buy trade back to this resistance level, okay? I'm assuming that you want to do this, take a buy from here, maybe it closes like this, and then you want to take a buy back to this level. Number one, you can put your stop loss here. You can put your stop loss beneath these candles, which are the previous support and resistance level. All right, you can put your stop loss right beneath it. And of course, you always want to calculate. You want to know, like, what amount am I going to lose? So for example, let's say you put your stop loss here. Let me mark it out so we can do some math here. And then if you still don't know how to set stop loss, please, I already talked about, I did a mobile sample with on the Pips Mastery folder I sent to you guys. Please just watch it so that I don't get to like go through that anymore. All right, so this is 1916. So let's assume you're taking your entry here. And this is why we will use something like this. Okay, so this is like something to just expect and work on. So at even the candle closes bullish and then you're taking this trade, this is where your stop loss will be. Your stop loss will exactly be at the tip of this red line, which is here. That's one way to set it. At least you give a few pips gap, right, for breathing space. and then you shoot the buy trade and obviously set your take profit at least to the body also of the candle, not to the tip of the wick. The body is like the more guaranteed place, you know, like look at how many times price got to the body. 1, 2, 3, 4, 5, like 5 candles actually like played around that region. It's more sure and more confirmed. So you can do this. So this is where this exact level is where, you know, I would just recommend you put your take profit for an example. All right. Now, why are you setting a stop loss? There are people who trade without stop loss. You're exposing yourself to a lot of risk actually. Because what a stop loss would do, for example, if this stop loss is 20 pips and then you are trading, let's say you're using $100 account and then this stop loss is 20 pips, it means that when the trade goes against you and then you are short by $80, I mean, you are short by $20, the trade will be closed automatically. You have $80 left. But for people who don't set stop loss, it means that you have to keep watching the trade. And then if it goes down against you by, say, 100 pips, all your money in that account is gone. All right, which is not what you want. It's better to like take multiple trades with your $100 than to just take one trade and then all your money is gone. Did I make sense right there? Yeah, I'm sure I did. You understand me so far? All right, you understand what I've been saying so far? Can I get a 1 in the chat room? If you don't, you can type it 2. Okay, good. Okay, so basically, like, that's the whole thing you need to know. And then your risk management, guys, is something you need to like make it a part and parcel of you. It's you setting a discipline for yourself. Nobody's going to come and discipline you. Nobody's going to come and, you know, like tell you this is what you must do. There's no must do here. All right. But the reality is that if you don't have some must do's by yourself, the market will create some for you. Another thing I tell people is you can't chase every chart. It's not possible. It's not possible. You can't know what's going on every chart. You can't. Well, if not for the sake of education and teaching that I've been doing in the course of this week, I don't even get to like analyze this many pairs in a week. I don't. There's no point actually. Like, it's a waste of time. The pairs I know I analyze week in, week out, Euro JPY. I'm a friend of this pair. It's also my friend. I look at it often. I look at GBP JPY, and recently I've started picking interest in gold. All right. You can't follow every chart. When you're a beginner, I would recommend for you just look for 1 or 2 pairs that you are following. And there are reasons for selecting these pairs. You want a pair that is moving very fast and another one that is not really moving too fast. Okay, one fast moving pair, the other one that is not moving too fast. It will help your judgment. It will help your ability to take trades. Excuse me. Please give me a minute. Let me get water, please. So for recommendations, I would recommend you just stick with the pairs I mentioned. They are volatile enough to make you money, honestly. Euro JPY, GBP JPY, and then gold. Gold is actually very, very fast, all right? So if you want to margin trade gold, you must, if you're using a lot size of maybe 1.0 on Euro JPY, you probably want to use like 0.2 or 0.3 on gold. Okay, because gold moves a lot and you need to be careful, right? Especially when you're new. Yeah, I like to talk about, but I know in principle it doesn't always work. That's why I won't lay a lot of emphasis on it. Some people would say your risk to reward ratio on every trade. I don't use that principle, honestly. Saying if your stop loss is 20 pips, you must look out for a trade of 60 pips. I don't use the principle, all right? So I won't teach what I don't use because I don't even believe I know it, all right? Is there any question so far or a contribution from any of the old guys? How have you been able to manage your risk? What does risk management mean to you? I'll take a few persons. Let's go, guys. Yeah, you have the floor, guy. Any questions so far? Okay, yeah. Willing to trade with what you're willing to lose, right? Yeah. Yeah, in principle, like, is there an amount like people are willing to lose? I'm just asking though. In principle, like in reality. Okay, when opening accounts, you would see leverage. The leverage is actually like you're accruing debt, like so if, for example, you're using your leverage of 1:100, it means that the broker is only going to treat every contract size based on your account alone. So if you're trading 1:500, which is what I usually recommend, and that's what I also use, it means your broker gives you an opportunity to take whatever deposit you have in there is seen as 5x of what you have. So it has its pro, it has its cons actually, but 500 is just like still cool enough. So if you, for example, if you lodge $1,000, they can give you an opportunity to take trades that $5,000 account should be able to take. And the implication is that you get to make more money with little. Of course, you get to lose more money when you lose. It's just like that. Did I answer your question? Oh yeah, you're welcome. All right, so yeah. Please and please, after this class, after this session, we're not ending it. Okay, so just stay tuned on the group. I'm getting people dropping their chats to me privately. Honestly, you guys will freak me out because I can't really touch everyone personally. And I really want to help. I want to as much as possible. But I need you guys to drop them on the group. I can react, others can learn, others can also correct you where you're going wrong. Because trading is actually a very, very participatory game, right? You only get better by trying. Don't be afraid to let people look at you like you don't know what you're doing, right? That's the only way you get to grow that confidence, okay? Don't only share your charts when you after you've seen that, oh, I made profits, all right, then you now share the chart. No, that it doesn't work that way, okay? It doesn't work that way. You won't be able to grow that way, okay? So I'm going to stop the recording now.